Welcome to TheoTrade. This is Don Kaufman, May 24th, 2023, 30 minutes after the cash close here on this Wednesday afternoon. Yeah, NVDA earnings after hours, rocking the markets to the upside. But much more importantly, at this point in time, we got to focus once again, the debt ceiling deal. And will any debt ceiling deal be good for the markets? We're going to cover that and much more here on this evening's update. Well, let's first start with the S&Ps, which are down some 18 handles. Like, it's been a fairly volatile day. We touched all the way down to 41.14 in the S&Ps. You can see the absolute low of the day ripped off of it in the after hours. Of course, NVIDIA comes out, market spikes, but it's fading. Listen, NVIDIA just came out, people. It ain't over yet. Speaking of NVIDIA, let's take a look specifically at NVIDIA in the after hours, talk about a little bit of a move to the upside. Here's the best part of it. So it closed in and around the 305 level. It's trading like 350. 45-point move, right? What was the expected move, though, in this marketplace? Survey says $21 and change. So you're looking at a fairly astounding move to the upside. You're over 2 standard deviations to the upside and continuing to run. Nevertheless, though, as I said, it ain't over, people. Come on, there's a conference call out there, so don't get ahead of yourself in NVIDIA. I think everybody was counting on this being good, and good it was. You would think that most of this was actually priced into the upside, but think again. In fact, you have to open up now a 3-year chart to see us actually crack all-time high. Here's the actual really crazy part. NVIDIA, just off the top of my head, I know it was like a $750 billion company. There it is, $750 billion company. But with this rally, we might have another $1 trillion firm. Ladies and gentlemen, it is going to be close. We'll see where it actually ends up tomorrow after the conference call, after everything else that's going to go on. But what's much more in focus right now, maybe, just maybe, NVIDIA kind of saved the day a bit among some of the tech stocks that were taking hits today. But I got to tell you, it's all about still the debt ceiling discussion. And, everybody's waiting for, all right, they're going to come up with a deal. And I have to start asking that question, is a deal, okay, any deal going to be good for the marketplace? Because I can give you actually a number of reasons that any deal, okay, set forth, there's so much anticipation that the deal is going to be done, that the markets are going to rally. That alone is enough to actually want to fade the market. But you also have to think to yourself, then any deal that's going to be done is going to be dramatic spending cuts. I mean, that's what the fight basically is about. And again, how it's interpreted by markets and how order flow is going to play out, okay, is anybody's best guess. Let's again go to the S&Ps though, because I want to show you again kind of an anticipation of this deal. What have we had so far? I said this in the weekend update, and I'm going to say it again, okay, to remind each and every one of you kind of where we were. On the weekend update, we basically closed right to the upper edge. That line that's on your screen, that's 42.11. That's that line right there. It's one of our gravity points. The lower gravity point over here, okay, is 41.06. And I said time and again on the weekend update, like, look, there's no difference. There's no difference between a 42.11 and a 41.06. And a lot of people didn't get what I meant by that. And what I meant by that is, well, literally, there's no difference. Like, okay, so what? You're at 42.11, you're to the upside over here. So maybe we're a little closer to breaking out to the upside. The interesting and ironic point to be made is today we came right down, okay, almost touching into the 41.06, and you're thinking, oh, now we have the propensity to be able to break to the downside. Look, nothing has changed. We're still locked inside of the range. Okay, range hasn't broken. Yeah, a little fear, a little loathing in the marketplace, but nothing has effectively changed. And that's why I say 41.06 or, right up here to 42.11, they're basically the exact same thing. And again, to display to you how close we got to that gravity point, and again, there's that 41.14. You can see the 41.06 getting down there would have been some fireworks, though, in this market. So I already kind of gave you my feel, again, on the debt ceiling discussions, that there's so much anticipation. If we do pop to the upside, okay, I'm going to tell you right now, and I want to be very clear about this. If, okay, we actually figure it out and all of a sudden there's a deal and we immediately pop to the upside, you better believe I'm going to jump in, I'm going to fade it. This is not about, Don getting bearish. It's about too much anticipation. It's everybody's assumption right now that a deal being done is a positive thing for the marketplace, okay? Why is it positive? I mean, look, a deal is getting done sooner or later. Whether we default or not is neither here nor there. And a technical default and an actual default are two very, very different animals. And that's also incredibly important. And I don't want to beat that one to death, but when I say a technical default, all right, so we're out of money. Okay, but maybe no interest rate, payments have come due. Nobody's going to get paid out there for a little while. Nevertheless, the point being, again, they're going to work a deal one way or the other. And when the deal gets worked out, if there's huge spending cuts and we still have inflation, you tell me how that's good for the marketplace. Spending cuts, we're still in an inflationary environment. Right now, the Fed Fund futures are projecting about a 31% chance of a rate hike. Okay, I believe that those numbers are probably going to come a little higher. Some of the Fed speak out there right now is a little bit mixed. In fact, Fed minutes came out today. Okay, and basically all of our Federal Reserve was pretty much split down the middle. Some are saying still hike. Some are saying that's it. It's a pause. Okay, it's again, the market right now is giving us a 31% chance of another 25 basis point hike. All right, let's get down to business on some levels right now because there is something very interesting playing out. Push NVIDIA aside for a second. Okay, push tech aside for a second. I mean, if you look at tech right now in the after hours, I'm pushing it aside, but I did want to point out, like Apple is not rallying per se on NVIDIA, which I found interesting. Okay, what about Microsoft? It's rallying. Anything that has to do with AI, okay, is actually seeing a little bit of a bid to the marketplace. But as I said to you about NVIDIA, okay, it's not over just yet. By the way, it is now at 360. Okay, you're looking right now. Again, it closed, just north of 300, 55-point move. You're almost at 3 deviation territory. Right here, people, this is when I tell you, don't sell options naked in equity products before earnings because there's no saving grace over here unless they say something horrific during, of course, the conference call. Anyway, the point being over there, anything AI related is actually running to the upside. Everything else, though, is fairly stagnant. But again, the reason I say push that aside, what's in play right now, first of all, the financials, they took a bit of a hit today. So financials, once again, they took a bit of a hit. They're outside the lower edge of the expected move. The energy sector, okay, actually finished the day massively unchanged, and it was kind of a mixed bag of goods, specifically inside of tech. So the day was largely mixed, but here is what you really want to focus on. Right now, okay, to me, it's even less about sectors. We know that tech is the preeminent sector. Like, that's it. Like, tech is the preeminent sector. All right, just showing a little bit about financials, maybe a little bit about the energy sector, because those two, they matter, but not nearly as much, obviously, as tech. And tech clearly has got a rally on its hands with NVIDIA. But much more appropriately, you got to look at the SPX, the mother of all products. And the reason that it's so important, okay, to kind of gather where the SPX is what I call kind of getting orientation. Look where we closed, right? Right in this neighborhood. We are outside the edge of the expected move, even with the rally back. I mean, I see that the SPX closed down 30. So let's say the SPX rallied back. Guess where it's going to rally right to? Okay, it's going to sit. And by the way, I'm going to give you the SPX level. It's 41.28. This marketplace right now is on 41.28. You're like, but it doesn't say that. Well, look, we rallied back a little bit after the close. Okay, and technically, according to the S&Ps, the SPX is sitting right around 41.28. So we are on, and again, I want to zoom into this. We are actually on the lower edge of the expected move. So we're kind of stuck between a rock and a hard place. And it doesn't matter necessarily that NVIDIA rallied, because what's so interesting about this is we have this 41.28 right here in the SPX, okay? But in the S&P futures, we actually have just below that. It's about 41, okay, 06. And again, we're hanging out here at the lower edge of the expected move. Losing that 41.06 in the S&Ps could come into play. To me, that's what we focus on for the remainder of this week. Thursday, Friday, that's all we focus on. So what if we rally back? Okay, when I say so what if we rally back, I mean, look, I've seen that movie before. Like, how many times do we have to rally back? Look, we're coming into a holiday weekend. Okay, a lot of anticipation to holiday weekend, but look, if a deal's not done, the markets are going to feel the fear a little bit. I think they have to. But the thing you really got to watch out for, and again, this is, all right, what I really want to emphasize is do not have the assumption, okay, that a debt ceiling deal is necessarily a positive thing for the market. That's not me being like glass half full or half empty over here. It's too much anticipation. It's too many people on one side of the trade, too many people banking. Look, eventually they're going to have a deal. Okay, but the longer this goes on, maybe the worse that deal is going to be for the markets. That anticipation could turn into fear and loathing inside of the marketplace. And I would not forget, okay, the capacity, all right, of when we break this range of a little violence inside of your trade. Thanks everybody for joining us here at TheoTrade. Have a wonderful evening. Bye-bye.